if you're on here, I want to test this out. I haven't used YouTube before, so let me know if you can hear me okay. And also let me know if you're able to kind of see what's happening here. I'm going to go ahead and get some notes up in front of me. And we're going to get started, but make sure you use the chat box there on the side, and we'll get going. So let's go ahead and get started. Have you ever stopped to think about, over the last few weeks, the last month or so, how much money was actually lost in the stock market due to the coronavirus, and all the corrections that have happened there? It was estimated that every American, this is what it was estimated, every American lost on average $22,313 a piece. Just a short period of time. So today we're going to be talking about knowing your numbers and avoiding some really bad investments. So guys, thank you so much. This is our weekly bite of reality. This is Faith-Based Investing Live. I'm your resident faith-based investor. I'm your host, Joshua Christensen, and you could have chosen to spend your time in a lot of different ways, but you chose to spend it here with me right now, and that means a lot to me. Thank you so much for taking the time to be with me this morning. There's a chat box on the right-hand side over here, so don't be shy to ask questions throughout. I'm gonna do my best to keep up with questions and stuff, but don't be shy. So last week we actually discussed 10 reasons that faith-based investors are different than your typical real estate investor. So today we're going to actually be digging into number one, which is that we need to be stewards of what God asked us to manage. So we're going to become the master of the house. All right. So we're going to become that steward. So Proverbs chapter 27 in verse 23 says, "Know well the condition of your flock and pay attention to your herds, for wealth is not forever. Not even a crown lasts for all time." I love that passage. Such a cool passage, because it reminds me that knowing the condition of our flocks and our herds and paying really close attention to this, it's all about stewardship. It's about managing your business well. It's about knowing your numbers and understanding the cash flow, the differences between income and expenses. All right. So it's really important as real estate investors that we really know the numbers. And now, this today, I'm not talking about your personal budget. If you want to invest in real estate, you should already have your personal budget kind of under control and know that. So that's not what today's going to be about. All right. We're talking about investing in real estate. So I want to give you an example. This is a very real deal that we did in 2019. This is one that I was personally involved in. We're talking about a 4-unit property. Some of you might refer to it as a fourplex. So if you've got a piece of paper, you might want to jot some of these numbers down and see if this would make sense to you. All right. So the sales price was $250,000. All right. $250,000. So divided by 4, you're at $62,500 per unit. All right. So $250,000. The market value at the time that we bought it was around $265,000. And the monthly rental income at the time that we bought it was around $2,700 a month. So we had monthly expenses of about $2,400 a month. So that left us a positive cash flow of about $300 a month. Doesn't sound like a lot for a fourplex, right? So on the surface, it might look like an okay deal, Maybe, but there's a lot of unforeseen hidden costs that were involved in this deal. So there was no management fee that was built into that $2,400 expense. So typically in our market, 10% of the rents, that would have been $240 a month that we'd be paying plus tax, for professional management of the property. That would have eaten up our $300 of positive cash flow pretty quickly, right? Well, there also was not anything set aside for maintenance and repairs. There wasn't anything set aside for capital expenditures like the roof, parking, exterior paint, things like that. So when you start to factor this stuff in, um, you can actually you can start losing some money pretty darn quickly, maybe. But this is where knowing your numbers comes into play. All right. As a faith based investor, we're looking to glorify God in everything that we do, right? So let's get a little bit deeper into these numbers, and I'm going to show you how this deal actually came together. All right. This is really cool. So we negotiated, um, we negotiated 11% as a down payment. It means we had to put less money into the deal, which improves a return on our investment, right? The banks typically want 25% down. So in this deal, we only had to put 11% down. That saves us about 14% of our upfront investment. We were able to negotiate a 20-year amortization. Normally, the bank is going to have us on a 30-year amortization. So this is important. We got 5.25% for the first 3 years. On a fourplex with the banks at the time that we did it, we would have been looking at something in the 6 to 6.5% range on our interest rate. So we were able to get a much lower interest rate, and we were able to get a lower term. All right. Well, that's important because the shorter amortization is what gave the seller what he wanted, because he had a certain payment that he wanted to make on a monthly basis. So rather than increasing the interest rate to get to that payment, we reduced the term and got him to his rate, but that kept us at a lower interest rate. So, what the lower term did for us is it actually increased how much the tenants are paying down the mortgage for us. So, we also knew going into this deal that the current rents at 2,700 a month were low for the market. So, here's the real numbers that uh, started out kind of looking like a loser. So the expenses were 2,400 a month, right? That was the mortgage payment, the insurance, the property taxes, no management, no expenses, none of the maintenance or anything in there. So we wanted to hire a professional management team, but because the numbers weren't there, we decided to self-manage the property to save on that expense, and help kind of improve our numbers. And we didn't plan on that originally when we were buying this property, but that's how I got into property management. I wasn't planning on getting into property management, but we started self-managing our property last year. And today, over the last month, I actually started a property management company, and I picked up some other properties for other people that I'm managing now as well. So I kind of do both. But the income, the revenue, the rents, we were able to raise from $2,700. We've raised them up to $3,192, and we've got one of our tenants who pays late every month. So there's late fees on top of the $3,192. So we've got like a $500 to $600 a month swing in the last 6 months that we've been able to increase the rents. The mortgage each year, the tenants are actually paying down $7,000 a year, versus on a 30-year mortgage, it would have only been around $2,500 a month. So it's almost 3 times the equity pay down, the principal reduction on that mortgage that our tenants are paying. So that's amazing, that we're able to triple the reduction on the payment, which is going to ultimately, that's part of our profitability on the deal, right? So then finally, the value of the property, we were able to create what's called forced appreciation by improving the rents. we immediately improve the value of the property. So today, the value of our property is somewhere around $310,000. Now, in 6 months, by raising those rents, we increase the value of the property by $60,000. And so over 3 years, over the next 3 years that we own this property, we've got a positive rental income of $18,000. We got positive monthly pay down $21,000. We got forced appreciation of $60,000, and we've got reduced expenses of $7,200. So it's a 3-year gain that's over six figures. And had we not known those numbers and just looked at the surface, we might have missed out on this deal. But that's where you become the master of your house, when when you understand the numbers and you can read between the lines and see these things. You become the master of your house so that he can become the master of the house. It's faith-based investing is about gaining for the glory of God. So you've got to know your numbers. All right. So do you remember the parable, the 10 minas, or the parable of the talents? There were the men who took the minas and the talents and they increased them. They were honored and they were given more to manage. But the men who lived in fear and buried it and returned it to the landowner, they were completely dishonored, and what they had was taken from them. There's a lot of really valuable lessons and nuggets inside that parable that Jesus taught us about this. So faith-based investors know their numbers. This is so, so, so important. So I want to give you some practicals on how you can learn how to dig into your numbers. All right. So number one, start taking some classes. All right. You can pay for classes. There's a lot of people out there that offer classes, some pretty hefty fees, but you make an investment in your education. In the world, we invest in college. This is your college, right? You want to become a real estate investor, you're going to have to pay some people, take some classes. There's a lot of free classes available online. You've got live classes like this one that are going to teach you a lot of valuable information. You can invest in books. There's a lot of workbooks and stuff out there that you can get. YouTube has tons and tons and tons of video content on investing. So take some classes, start investing in yourself. It doesn't have to cost you a ton of money. You can start investing in your education with some of these more advanced programs once you get some of the basics down. But the second thing you want to do is you want to look at software programs. All right. So I use Excel a lot, Microsoft Office Excel, and I build spreadsheets and I play out scenarios. Right. So you might want to purchase a property management software program. There's some free ones out there if you're self-managing. There's other ones that cost a little bit on a monthly basis, but that property management software is going to help you with knowing what expenses you need to be aware of if you're going to be managing properties, if you're going to be renting properties out. Ask other investors in your area what software they use. All right. I mean, that's really easy to do. But be careful, because on these software programs, there's a lot of numbers that they already pre-fill, and there's default numbers that plug in. These software programs are built for a national audience, and every market is different, and every market has different numbers. So you need to do the research, know your local laws, and know your local numbers of what works in the market that you're investing in, because they're not all the same. So you need to know that stuff. You're going to have to do some legwork on that. Books. Number 3, books. Read. If you're not a good reader, start reading. Go take a class and learn how to read, because reading is so, so important if you want to grow as an investor. I'll give you a couple of, here's a couple of books that I've read. I mean, I've read a ton of books on this stuff, but here's a couple that can get you started. All right. Rich Dad, Poor Dad by Robert Kiyosaki. A lot of you on this, you may have already read that. If you haven't, it's a great, great read. How to Invest in Real Estate Without Banks. This is Marco Rubel. He was from Eastern Europe, came to America, and he started investing in real estate with no money on his own. So he teaches some great things on learning how to invest when you don't have a lot of money to work with. Investing with purpose. That's Rick Malero. Rick owns a mortgage company out in Florida, and he talks a lot about tying your purpose back into investing. And he has a very strong Christian faith. It's a fantastic book. Rick's a great guy. Another one is called Hold. Some of you may have heard of the real estate company Keller Williams. Hold is written by a few of the agents that work with Keller Williams, and they talk about creating long-term wealth through real estate investing and rentals. Another one is How to Quit Your Job with Rental Properties by Dustin Heiner. I'm actually reading that right now, but the title pretty much tells you what it's about. I mean, it's about investing in rental properties and understanding the numbers and how to find those deals and things like that. So there's so many books out there that you can read, and you want to build a library. This is your education, so take it seriously. Number 4, practice. Practice, practice, practice. I can't tell you how important that is. So you've got your software programs, right? You've got your spreadsheets. Start making up profiles of different deals. Well, how do you do that? You can start looking for properties that are for sale. You can go onto Zillow, you can go onto realtor.com and just look at various different properties, what they're asking, and start doing the research on those properties. Run the numbers, plug them into your spreadsheets, plug them into your software programs, and run those numbers. And you're going to start to be able to get a really good feel for what works and what doesn't work. Change your strategy as you're running your numbers. Take risks, and then other times be super, super conservative, and you'll start to see different patterns. But if you were to do 5 days a week, if you did 3 of these practice trial, properties every single day, take 10 or 15 minutes on each one. So maybe you spend 30 minutes to an hour a day running these numbers and playing for these, looking for properties, running numbers, checking them out. 3 a day, 5 days a week. Take Saturday and Sunday off. All right. That's 15 a week. Over 6 months, you will have written and run numbers on 390 deals. Do you think you're going to learn a few things on 390 deals? Heck yeah. Look at what if you did it for a year? If you did this for 1 year, will have run numbers on 780 deals in the first 12 months before you ever pulled the trigger. It takes 4 years to get a bachelor's degree in college. It takes another 2.5 years to get a master's degree after that. So what in 1 year, 780 deals is going to make you you're going to become almost master level student of your craft. I mean, run these numbers, master these things. You'll master it in no time, and you will run circles around your competition in your market. Drive around the neighborhoods. What's unique about the neighborhood? Why would somebody want to live here? What are the schools like? What's the crime rate like? What's special about this area, and how much are people paying to live in this area? What drives people here? Is this an area where people move in and out a lot? Is it a transitional neighborhood, or is it more permanent? This is information that you need to know as you're making decisions about where to invest your hard-earned money. You want to research property management fees in your area. In my area, 10% is the norm of what you will pay for professional management. That's different all over the country. So know what your numbers are in your market. If you change markets, do the research in that market before you start investing so that you kind of know what the numbers are and what you can expect. You'll be able to avoid a lot of costly mistakes. All right. Cash is king. Number 5. Guys, this is so big. All right. You want to set aside cash out of your monthly cash flow for 2 things. You're going to have expenses that come up. You're going to have that water heater that goes out, the toilet that needs to be replaced. You're going to have a roof that needs to be replaced. Things need to be painted. The parking lots need to be repaved. There's a lot of future expenses that you don't necessarily see when you're running the numbers on the front end. So you have to set some money aside out of your monthly cash flow for unforeseen expenses in the future. Just move that money over, keep it on your balance sheet, but move it over so that you have it available when it's needed. Otherwise, you're going to be taking money out of your pocket, and that's not the whole reason why you invest, right? Um, you got to learn to be, uh, you've got to learn to be cash rich versus cash poor. You want to keep your cash in the business for a time to build those capital reserves. I mean, it's challenging. I was talking to an investor the other day who he's got all kinds of equity. He's a millionaire in real estate on paper, but he doesn't have any cash to work with. Everything he has is tied up in those properties. And that's a terrible place to be when you can see your wealth, but you can't touch it. And you don't have any money to work on the properties. You don't have any money to take care of the properties and protect your investment over time. And you don't have any money to invest in other opportunities. And once you start doing this, you're going to see opportunities constantly. And sometimes it's frustrating when your money's tied up. So, number 6, practice repair costs. This is one that gets people all the time. All right. So, take out a piece of paper and go through every room in your house and look at every single item in that room. Look at the light switches. Write these things down on this piece of paper, okay? Light switches, drywall, light switch covers, outlets, outlet covers, trim, doors, doorknobs, hinges, air vents, paint, windows, caulk, lights, light bulbs, etc. All right? Write down every single separate piece on a piece of paper. Do that through every room in your house. Then take that list. It's going to be several pages, and it'll take you a little while to put this together. But walk around Home Depot and Lowe's, and next to each item, take an inventory and find out how much every single item costs. How much does an angle stop cost you for the supply line for your toilet? Right? So for the supply line underneath your sink, not only the angle stop, but what about the actual line that goes from the water valve up to the faucet or up to the toilet? You got 2 items there to connect the water to the toilet. You need to know what these numbers are so that when repairs come up, you have an idea of what things cost. You're walking around a new property or a new investment, you're looking at things, you can start to get an assessment of what it's going to cost and where the value add is in that investment. So you need to know these numbers. This exercise takes some time. So don't be afraid of it. It won't cost you anything to do it, but it'll save you a ton of money if you can kind of see this thing. So, and then the other thing that you've got to know is that's going to give you the cost of the materials. You also need to know the cost of the labor, right? So start interviewing handymen and contractors in your area to find out what their labor costs are. That's going to help you tremendously over time. All right. So by going through all of these exercises, you're going to be advanced in your investing, and you're going to just know the numbers. So it's dangerous to jump in without knowing your numbers. So you got to take this seriously. Investing in real estate is not for everybody. That's okay. If you don't have any desire to work, then you might be headed for disaster if you jump into real estate. But investing in real estate is work. I mean, sometimes it's really hard work, and you've got to work hard if you want to live easy. Spend a couple of years working really hard so that you set yourself up for some easy living later on, and you can serve in ministry, and you can give more, you can do so many more things, you can help out the needy in your community. There's so many different things you can do if you free up your time for income. So investing in real estate, you know it's a big deal. It creates a lot of opportunity for you. So over time, over and over, people are constantly telling me that they don't know where to start. Listen, most of this practice doesn't cost you anything, doesn't cost you any money. So take the time to learn and get going, and know what it is you're getting into, because to become the master of your house, it takes work. And you really want to become the master of your house, because by doing so, you're going to honor the master of your house. David, you're absolutely right. Um, yeah, he said, my wife was just saying this morning about one of our businesses that we got to know our numbers up front. That's right, David. I mean, you got to jump in. You got to know these numbers. And David and his wife, they're involved in a lot of they got their hand in several different businesses, and they've got some little farm animals going on, they've got some education projects going on, and so if they don't know their numbers in each one of those different businesses, man, they could sink pretty fast. And that's a great example, David. But I mean, you're going to be so glad that you did this if you really know, if you know your numbers. If you're impatient and you jump in too fast, Proverbs says that that's foolish. Proverbs 16:32 says patience is better than power, and controlling one's temper is better than um, conquering a city. Well, you can try to capture the city all you want, but if you don't know your numbers, it's going to destroy you. And patience is a much better virtue. Take a year. If you're going to spend 6 years on a master's degree at college, spend 1 year learning how to become a real estate investor before you jump in and start hurting yourself. Faith-based investors take their time and hone their skills and crafts, and they avoid making bad investment decisions in the process. You'll be so glad that you did. Some of the biggest mistakes I see with investors around impatience is that they buy properties that don't make any sense. They miss out on properties that do make sense because they don't know how to read the numbers. And so they don't take the time to learn and master their craft. It's like if you dive in head first into real estate investing and you just go all in, you might just get your head stuck in the muck. You don't want to go down that path. It'll be ugly, it'll be painful. You just don't want to do it. So I know that I have just thrown a lot of information at you in a short period of time. It's like turning on the fire hose, and it's okay. Just take it all in. This video is going to be recorded so you can watch it. If anybody's got any questions, go ahead and throw them up over here on the side, and I'll tackle those things. But guys, just take it in. Watch the video over and over. Share this with your friends. Put it out on Facebook. I mean, that'd be awesome. Subscribe to the channel, and you're going to get updates as I put more classes on here. Next week, we're going to be going into number 2 on our list of 10 things that make us different. And so you want to get into that. Nick, you got a question. Do you believe that impatience is due to overambition to make the most money in the shortest amount of time? That's kind of a heavy loaded question, Nick. Do you believe impatience is due to overambition? I don't know if you can really have over ambition. You can have zeal without knowledge, and you can get really zealous about something and jump into something too fast. And being too zealous can hurt you. So, yeah, we want to make the most money in the shortest amount of time. The best way to do that is to slow down. If you want to go fast, slow down. It's almost like the ant in Proverbs 6, right? You go to the ant, you sluggard, consider his ways and be wise. The ant takes one piece of grain or whatever it is at a time, and he builds. Every day, he builds just a little bit at a time. And at first, you don't really see what he's building. But man, eventually, you start to see it pretty quickly. It's like that snowball effect. One snowflake, two snowflakes, three, four, five. It's a compound effect of life that happens. The more you do something, the faster it goes. But it starts out and it doesn't look like anything is happening. Use the COVID, for example. When it started out, we were all kind of tripping out, like back in February when they're talking about this. Oh, coronavirus. Everybody was joking about coronavirus. You had a couple of people who got infected. Today, there's a couple million people in the world, and it has gone very, very rapidly. The same thing is true in investing. Your ambition and impatience will actually hurt you if you jump ahead and you skip steps and you don't learn. But if you take the time to do it, man, it will ramp very, very quickly once you get going. So hopefully that answers your question, Nick. I know I just kind of threw a lot at you, but there's a lot here, guys. There's a lot to really take in, and I'm grateful for the questions and for the participation. And we want to get more people involved in doing this because we want to create a revolution. Right now, we gotta get this revolution of real estate investing going in our country that is centered on Christ, that's centered on glorifying God and what we do. Because right now there's a lot of investment gurus out there that teach a lot of different things, and it's all about for the sake of making more money and for getting rich, and they take advantage of people and teach a lot of stuff that isn't necessary. And so there's a lot of Christian investors who think they actually hold back because they're afraid to invest, thinking that they couldn't possibly honor God by investing in real estate. And that's not true. It's not true at all. So we need to start a revolution in real estate investing. Guys, share this with people on your Facebook pages and on your Instagrams and wherever it is that you share this stuff. I mean, I'm not all that techie. This is the first time I've done YouTube Live, but put it out there. Let's build a nation of investors who are honoring God. Guys, it's been my time's pretty much up here, but it's been a lot of fun being with you this morning. And I'm fired up to share all this stuff with you, and that we can grow together. I've been doing this for shoot 20 years or so, and it's exciting to be able to give back. It's exciting to share things that we've learned. Um, we want to make this into a national movement of Christian investors. And guys, this is all to God's glory. Make sure that you subscribe to the YouTube channel also, so that it'll give you updates as we're doing this. On Mondays, I'm putting out a Monday motivation. That's just a real short little recording, just a couple minutes, that you can listen to on Facebook. And it's going to be some kind of a tip or something like that. I've been doing it for the last few weeks, and I'm going to keep on doing that on Mondays. And then every Friday, we'll be back here at 9 o'clock. So bring your friends, invite your friends. Just put this on your calendar and keep coming back, guys. If you're in the market to buy real estate, if you're in the market you want to run some deals, give me a call. I'm a real estate broker. I sell real estate in Albuquerque. I have a property management company here in Albuquerque. I get this stuff. If you want to come into an emerging market in Albuquerque, I'm happy to go over some of that with you as well. But the thing is, get some one-on-one time. Let's talk. Shoot me a message at office@eqtpm.com, and you can send me a private message on our Facebook page, which is EQTPM on Facebook. Guys, we can change the world together, and we can make a difference, and we can really honor God in everything that we do. So thanks so much for spending your time with us. Don't forget to subscribe on the page, like our Facebook page, share this video with your friends, all that fun stuff. Guys, I appreciate you being here. Have an awesome, awesome day. I'm going to go ahead and give you the email address and the Facebook page right here in the chat. So you can take a look at that. But it's facebook.com/EQTPM. All right. Guys, have an awesome day. It's so glad that you could join us. All right. Appreciate you. Are there any other questions before I tune out? We're good. Just shout out no, thanks, yeah, awesome. All right, I'm out. Have a great day.